All right, let's move on to our first conversation now. See, yesterday we did get the July MPC decision determining the cost of borrowing in Nigeria. But let's see how some markets have reacted to that. It's the trading day right after that decision. Let's see what's happened so far. Joining me now is Chuka Nwachukwu, Chief Dealer, Group Head of Trading at UBA Group. Great to have you on the show, sir.
Thank you, Laddie.
So definitely, this was expected, another whole decision. It's happened now. It almost feels like maybe there's no change, for the markets.
Rightly so. Recall my last interview here, I did mention that MPC market expected MPC to hold rate. This is because of some of these parameters, especially the inflation. We saw inflation figure came out just about marginally about 2 basis points from 15.93 to 15.91. Also, another factor is that economic GDP growth. We saw it, around within 3.77 levels, and then of course global risk. The war between Iran and the US. And so I think MPC just took all these things into consideration, and I said, look, you know what, I think it's best to hold now. It is better to just watch the market and then leave all parameters the way it is, pending when some of these items that I mentioned or some of these factors that I mentioned will improve.
So do you think this is the last hold before maybe a possible rate cut?
Not necessarily. We still have about 2 MPC meetings. I should also feel that the next MPC meeting, CBN will still maintain. But again, towards the last MCPC meeting, I believe there will probably be a rate cut. So I don't think that there won't be much changes between this MPC meeting and the next one. I think that CBN will just hold on, monitor all these parameters. Of course, the external reserve is doing well, but it's not the comfort zone where the CBN wants it to be. As well as inflation. Like I said earlier, inflation has gradually eased just slightly about 2 basis points. Prior to this last week inflation figure, we saw inflation move about 15.3% to about 15.93%. And so all these factors, will determine what will happen in the next going to the last 2 MPC of the year. But I think that the next one, CBN will still maintain.
I'm guessing since there was no change, from the last meeting, I guess maybe we wouldn't expect any change when it comes to, Treasury bills and FGN bond yields, investors that, like to lend money, to the government or to companies.
Yeah, you're absolutely right. The market remains stable due to the fact that market has already priced in the CBN decision. So we've seen Treasury bills 1 year trading around the 17% levels. The bond, there was a bond auction on Monday, and then the longest tenure, which is at 2037, trading around the 18.2 levels. So nothing really has changed, though the market is quite liquid. We've seen yield continue to decline due to the system liquidity, which is quite robust. So we just continue to see things play around within this range. There hasn't been much reaction from the market as regard the MPC decision due to the fact the market has already priced it in.
So, definitely, I know the governor also spoke about, interbank lending rates and NOFA. How would this, impact banks, when it comes to adjusting, lending and deposit rates and, banks that, lend money between each other?
Yeah, I mean, you're talking about interbank market.
Right.
It's really not, like I said earlier, what affects the fixed income market as regard the MPC decision is also affecting the money market. And so We've seen the yield, you've seen the rates within that SDS level at 22%. Like I mentioned earlier, market is still highly liquid due to the OMO maturity, NTV maturity, as well as a coupon payment. FAC just came in, so that obviously will bring in another about 1.92 trillion into the system. So market has been constantly been liquid, and that's why we've seen it, the activities on the fixed income market, being bullish, because some of this liquidity, the investors obviously need to reinvest them into the fixed income space. And so this hasn't the MPC decision hasn't really had any effect on both the fixed income market and the money market as at now.
Right. So how should corporate treasurers and retail investors, do they need to reposition their portfolios or just maintain status quo?
So, like I said earlier, we expect a rate cut at the last MPC, and so as a trader, as an investor, I think that is now is the best time is now for you to lock in your investment, especially the T-bills and the bonds. We have the yield trading around 18%, like I said earlier. So if this expectation is what we expect, then I expect that people should just buy be bullish on the security, knowing fully well that towards the end of the year there will be a rate cut. So if fixed income security yields are trading around 18%, obviously once there's a rate cut, we see almost like 200 basis point drop or 300 basis point drop to around 16 or 15%. So I think this is the right time for investors to lock in and then wait for the end of the year.
All right. I guess enjoy the yields while they're still high, before the cuts come in. Thank you so much, Chuka Nwachukwu, as the Chief Dealer Group Head of Trading at UBA Group. Thank you so much, sir.
Thank you, Ladi. Thank you very much.